on a macro level, and I know all banks are different, I get it. What are you sort of expecting as a larger trend from the numbers that we see rolling out?
I think what you're going to see, Brian, is that banks are going to stabilize. We're not going to have the volatility we've seen in earnings for the past 18 months because of COVID and other factors. And then the real question is, what does the run rate look like going forward? And I think it's going to look a lot like 2019. The JP Morgan is only half loans today. That number is falling because they're not making many loans. They're not buying many loans. So they've invested in securities. And that's the story across the industry is that even though the Fed has grown deposits by 30%, lending has not been growing. We're at a 50-year low for lending versus total bank assets. So it's kind of like the end of World War II when the banks were all government bonds. They're buying securities, and that's not really driving net interest margin as much as we would hope.
You know, you're right. And maybe we need to find another term. I actually, I don't like to call Goldman Sachs a bank. JP Morgan a bank.
No.
I understand they have a banking unit, but they're very different than the thousands of small and local, banks that we use around the country. These are trading companies that may have a bank inside them. To your point, Chris, 50-year lows on lending. I mean, if that's the case, who's actually lending money these days?
The new platforms, the non-bank lenders. Whether you look at mortgage, whether you look at autos or consumer lending, that's where the origination is happening. That's where they're acquiring new leads, and that's how you make a loan. Banks have been so badly just limited and neutered by people like Elizabeth Warren, who think they're a problem. But the problem is that they support the economy. And if they don't lend, then you have less growth, less job creation. I think we have to re-examine how we look at these institutions. Because look at Bank of America. It's $2 trillion worth of assets and deposits, and they're barely growing. So we have to fix this, because if we don't get our banks in the game, we're not going to support the kind of economic expansion we'd like to see for our people.
Yeah, or our small businesses certainly out there as well. And to your point, Chris, some of these non-bank lenders are picking up the slack. But I do want to focus on one bank, because a while back on this show, and you're not a stock picker, you're not an analyst, I get that, but you talked to us about Western Alliance Bancorp. You talked to us about what a good spot they were in, under the radar, just crushing it, by the way. They continue to, WAL is the ticker. I'm not asking you to make a stock recommendation, but is this a company that you still think, even under the midst of all these big names, is doing it right?
Oh, very much. They are an example, Brian, of why the value creation is occurring in the smaller banks, the large regionals like Western Alliance, which was focused on the mortgage industry. And then they went and bought a very interesting company called AmeriHome from Apollo, which was run by a bunch of former Countrywide executives, the best team in the industry, frankly. And they are head-to-head with PennyMac and the other leaders in the industry. And as you can see, the stock was up almost a two-fold increase from that first conversation we had. So I feel very good. I'm a banker, but I always talk about fundamentals. I talk about drivers. And Western Alliance is a great example of why small banks generate more value than the larger banks.